relationship. Hello. Okay. That's good.
That was my fault, Gary. Now we're recording. Thank you, Jake.
Oh, no worries.
I usually have it automatic, but sometimes Gary and I chat at the beginning, so we don't want that.
Oh, yeah. I chatted with you a little.
Oh, good. I got your turn. I got you, Tamara. I won't let you go down.
Thanks, Jake.
That's probably my fault, Tamara, not yours. I talked to you a little bit too much before the meeting.
All good. All good.
But yeah, career visioning is something that if you want to build your wealth through people and relationships, it'll help you not only in your presentation as far as an agent, listing and buyer, but it'll help you learn how to attract the right talent in your life and how to support them, and how to think, and the mindset around it, and the techniques that you need to learn on how to do that. So it's a powerful class. I recommend you take it multiple times. So thanks, Jake. Awesome. Anybody else? Ahas or celebrations? All right, let's jump into the material. We'll start off with John Wooden, who was a great basketball coach. He said, when the world feels angry, gentleness is power. I read this and I thought this would be perfect for us because I think it's important. It's called Career Visioning. The name of the class is Career Visioning. Let us overcome the angry man with gentleness, the evil man with goodness, the miser with generosity, the liar with truth. In his book, Coach Wooden's Pyramid of Success with Jake Hardy, Coach describes one of his first lessons about the power of overcoming anger with gentleness. When I was a young boy, I was at a gravel pit with my father and a young man. They had a team of horses and were attempting to pull a load up a steep road. The young man driving the horses was loud and abusive. In response, the animals were agitated, worked against each other, and couldn't pull the load. With a gentle voice and a gentler touch, my dad calmed the horses and walked them forward with the load. It was an incredible reminder that gentleness can fix in a moment what an hour of shouting fails to achieve. Underline that. Gentleness can fix in a moment what an hour of shouting fails to achieve. The example of this father led Coach to understand that anger avoidance by disagreeing agreeably was one of the keys to a successful marriage. In his book, A Lifetime of Observations and Reflections on and Off the Court with Steve Jamison, Coach described it this way. Very early, Nellie and I understood that there would be times when we disagreed, but there would never be times when we had to be disagreeable. We kept to that rule for over half a century. So whether it's in the workplace or at home, we should remember, as Coach liked to say, you cannot antagonize and influence at the same time. If the other person is angry and has a bad tone of voice, we must be mindful not to match that tone, but to respond with gentleness. The idea, let us overcome the angry man with gentleness, is credited to you can pronounce it, a Hindu text from 400 BC. It's as true today as it was then. So I thought this was a pretty powerful thing, because you guys run into agents that are angry or clients that are angry? Ever?
Yes.
Yep. Oh, yeah.
Yeah, yeah. So, I mean, a lot of real estate trainers teach us to mirror and match. Do you think it'd be a good idea to mirror and match that behavior?
Only if you want colorful metaphors filling the room.
Yeah, it's kind of crazy, huh? Yeah, you got to calm down anger and emotion. It's important that you treat people with respect, even though they may not be treating with you with respect at the moment, because most of the time I find that when people are going through trauma and change, because change is trauma, they're not themselves. Have you ever run into that? So you can't expect people to always be themselves when their life is disrupted and they're moving from one place to another. You never know what they're going through. Give them some grace, including other agents that are out there, especially if you have a listing and you're getting multiple offers. I know you're under pressure, but they only have one offer, the one that they have for that buyer that they're working with, right? So yeah, when the world feels angry, gentleness is power. Anybody have any thoughts on that?
Here, I was just hearing Nikki talk about that, and about 20 minutes ago about,
Uh-huh.
having, the empathy and, the difference between empathy and sympathy when it comes to leadership, and then also, giving grace and to yourself as well.
Well, yeah,
It's big.
sure. Yeah, I mean, that's very, very powerful, Jake, exactly, because a lot of times there's no one that can be tougher on us than ourselves, right? So we're going to, give yourselves some slack, I mean, forgive yourself if you've made a mistake, even if somebody else on the other side might not be. Don't beat yourself up, You got too many great things to do and too many great people to serve, right? You give people permission to have a bad day. It's more on them and about them than it is about you. You control how you respond to events and situations and people. So make the best choice that you can and treat yourself the right way. Okay, good stuff. Thanks. Anybody else? Okay, next, Tamara. Begin with gratitude and watch the miracles flow your way. This is my buddy Jim Rohn, God rest his soul. Is thankfulness a survival skill? Well, maybe most of you would have responded with no, thankfulness is not key to survival. And I tend to agree with you. Most of us have probably already solved the necessary problems of survival, gone beyond that, and are now working to achieve our desires. But let me give you this key phrase. Learn to be thankful for what you already have while you pursue all that you want. I believe one of the greatest and perhaps one of the simplest lessons in life we can learn is to be thankful for what we have already received and accomplished. Both the years and experiences have brought me here to where I stand today, but it is the thankfulness that opened the opportunities of blessings, of unique experiences to flow my way. My gratitude starts with my parents who raised me, gave me an incredible foundation that's lasted me all these years, and continues with the mentors that I've met along the way who absolutely changed and revolutionized my income, my bank account, my future. I'm also very thankful for the people, the associations, for the ideas, for the chance to work and labor and to produce results. I'm grateful for it all. Always start with Thanksgiving. Be thankful for what you already have and see the miracles that come from this one simple act. Now, thankfulness is just the beginning. Next, you got to challenge yourself to produce. Produce more ideas than you need for yourself so you can share and give your ideas away. That's called fruitfulness and abundance. It means working on producing more than you need for yourself so you can begin blessing others, blessing your nation, blessing your enterprise. Once abundance starts to come, once someone becomes incredibly productive, it's amazing what the numbers turn out to be. But to begin this incredible process of blessing, it often starts with the act of thanksgiving and gratitude, being thankful for what you already have, for what you've already done. Begin the act of thanksgiving today and watch the miracles flow. Any thoughts on that? Anything comes to mind when you listen to that, when you hear that?
I'll share again, Gary. I've heard Holly Prescott say that many times when she's teaching classes, that be thankful for all that you have while pursuing all that you want. Mm-hmm. And like kind of keeping it grounded and keeping yourself grounded where, because as we said before, we're probably harder on ourselves than most anyone. And as we pursue, great things and the greatness that our businesses can have, it's easy to lose sight of that.
Right.
And so it's powerful.
Yeah. While we're pursuing our goals and our dreams, we don't look back and appreciate how far we come. A lot of times we're looking at the gap between where we are now and where we want to be, and are frustrated that we haven't gotten there sooner. Meanwhile, we don't take the blessing that comes and the nourishment that comes from everything that we've achieved so far. Right?
I have something to add to that too, as well. And it brings me back to, I don't have to be on this call. I get to be on this call. And I appreciate the fact that you do what you do, and I get to be a part of that.
Well, thank you. Thank you for being here. It's my pleasure to be with you because talk about extremely grateful and blessed. You know, Nikki and I were in the entertainment business when we first met. She was a dancer, not a stripper. I was a guitar player. And we met a long time ago doing that.
Let's say that a little bit slower. She was a professional dancer,
right,
not the other.
Right. Well, that was our line to make everybody laugh when we went on appointments and they asked us what we did before real estate. But yes, I mean, we've been blessed along, you know, I mean, it's been amazing, the journey. So you find what you're looking for, right, guys? So are you looking for something to be grateful for? Or you're looking for something to complain about? Because you're always going to find what you're looking for. All right. So get into habits that express gratitude. Make it a habit to write handwritten personal notes to people that you catch doing something well, whether it be your own team, whether it be in your own office, whether it be your own kids, whether it be your own, you know, family. Get somebody doing something well and show appreciation. You know, send handwritten thank you notes to people that you talk to on the phone. Okay. Not emails, not text, but handwritten thank you notes, handwritten attitudes of gratitude, you know, because what you send out, you get back. What you send out in slices, you get back in loaves. So if you give gratitude, it's amazing what you'll get back. And our life has been this way. So, I mean, so many people that we would need to thank all along the journey. Even before we met Keller Williams, I mean, on the way up, and everybody, you know, and it's just amazing. So, and find things to celebrate for yourself. You know, like I always say, get a board where you can write down things that you've achieved that you're proud of, you know, that week, that day, that month. Okay, and have that in front of you or on the wall in your office or at, you know, at your home, so you can see what you've done and celebrate it and use that to create momentum to keep moving forward in times of discouragement. Because do we ever get discouraged? Do you ever get knocked down on our butts? Okay, so that atta-girl and atta-boy board is something that might get you back up on your feet, okay, faster. But it's about responding is ideally in one deep breath whenever there's a challenge or adversity that's in front of you, and not being literally out of commission because you're knocked down. Does that make sense? Get back up fast. Okay, anybody else?
Yeah, Gary, this is Nancy Kaplan. I've been reading a book on, you know, just different ways of like being the best of yourself. Right. And I'm just looking at, as we're talking here, I have one of the quotes and it says, there are so many factors working against you. Don't be one of them. There you go. And I thought that was kind of something that, you know, I take to heart many times because you get so wrapped up in different things. Right. Don't work against yourself. Right. Don't beat yourself up, but also don't give anyone permission to slow you down. Yeah. Okay. Because there's a lot of people that you know, don't take to heart what something that's said, you know, that doesn't really mean anything. You make it bigger than it is. Right. You know, don't make a drunk monkey a drunk gorilla. Right. Right. So yeah. Focus on, yes, that's right. Good example. Thank you for sharing.
So Gary, I learned something a little while ago that gratitude, I wasn't very good at it when I was younger, but I practiced it and I became better at it. Wonderful. And I practiced it by writing down 10 things that I was grateful for. And in the beginning, I couldn't get them because I was all caught up in poor me. But now I can rattle them off in a heartbeat. And so that really helps me sometimes to just write down things I'm grateful for.
Well, congratulations. How did it make you feel while you were doing that?
Well, it just makes me feel full of love and happiness.
Well, there you go. And what's more attractive to people that you're trying to do business with?
Love and happiness, for sure.
That's right. That's right. So it's magnetic. Gratitude is magnetic. It will attract the masses. Meanwhile, you know, people that are, you know, grumpy and, you know, which reminds me, my daughters, when they were small, we were going to McDonald's, right? And they were crying and complaining in the back. And I said, got up to the window and I said, we're going to order 2 grumpy meals today. And they cracked up. I mean, happy meals, Daddy. No, I said grumpy meals because you're being grumpy back there. What's going on, right? So yes, you have a choice on how your attitude is going to be every day. If you start it with gratitude, you find things that you're grateful for. It's amazing how that can propel you through the day. And you'll find yourself catching more things to be grateful for. And when you catch more things to be grateful for, it's amazing the things that flow from that, which is exactly what Jim Rohn is saying. Okay, next, Tim. You guys are ready for some good real estate news? Don't say
yes, please.
Yes,
bring it.
Okay. Where do experts say the housing market is heading? Okay. Homes are selling fast. Okay. The Realtor.com said homes continue to sell quickly in what's normally the fastest moving time of the year. This is in contrast with 2020 when homes sold slower in the spring because of the pandemic and fastest in September and October. While we expect fall to be competitive, this year's seasonal pattern is likely more to be normal, with homes selling fastest from roughly now until midsummer. Okay. Next, sellers who have been hesitant to list homes as part of their personal health safety precautions may be more encouraged to list and show their homes with the population mostly vaccinated by mid-year. Okay, we all kind of anticipated that. Surveys show that seller confidence continued to rise in April. Extra confidence plus our recent survey finding that more homeowners than normal are planning to list their homes for sale in the next 12 months. Suggest that we may not see an end to the seller's market. We might see the intensity of competition diminish as the buyers have more options to choose from. Well, I'm telling you, you can't get to be any more of a seller's market than it already is. The numbers are amazing. Freddie Mac forecasts mortgage rates will continue to rise through the end of the year. So what happens when mortgage rates go up a little bit?
Purchase power decreases.
Yes, but buyers come out of the woodwork because they think bottom hit. So, okay, this should bring more buyers out. And it's not that much of an increase, but it still will impact buying power. They expect the average rate to go from 3.4% in the fourth quarter of 21, rising to 3.8% in the fourth quarter of 22. So that's still historically very low mortgage rates, which means affordability will be strong as long as prices don't go through the roof in a crazy way. So experts are optimistic about the second half of the year. Let's connect today to talk about more about the conditions in our local market. I love this KCM blog because pretty much all these articles are set up for you to send to your database. Okay, and they educate not only you, but they educate your clients, your customers, your database, and can encourage them to have a consultation with you, their trusted advisor. Okay, next page.
Hey, Gary, before you move on, that one where it looked like what, 0.2% change from fourth quarter this year to fourth quarter of next year.
Yeah, almost a half point, yeah.
Yeah, about a half point or so. I don't see that shifting our supply and demand analysis too much. That's not a huge increase. I don't know. Is that?
No, not at all. I don't see that either. It might cause some houses to stay on the market a little longer because there's less buyers that might be able to.
Longer than 2 weeks.
But I don't, from 1 week to 2 weeks, right?
Yeah, right.
But I don't think it's dramatically going to increase it either. I think it's something more dramatic would have to happen for our supply and demand to change dramatically, even to move it toward a balanced market.
Yeah.
You know? So we're still in that, it's funny, but even we're going to get to this in a little bit, but even though things are that way right now, so good for sellers, they're still good for buyers.
Mm-hmm.
It's still amazing. So it's really a unique time in history where it's great for buyers, sellers, and especially great for investors. Okay, next page. Buying a home is still affordable. Okay, this is a very good article. The three main factors that go into determining how affordable homes are for buyers. Number one, the mortgage rates. Number two, the payments as a percentage of income. And number three, home prices. NAR produces a housing affordability index. And they take these three factors into account. And it measures whether or not a typical family earns enough income to qualify for a mortgage loan on a typical home at the national and regional levels based on recent price and income data. What it indicates is a value of 100 means that a family with a median income has exactly enough income to qualify for a mortgage on a median priced home. An index above 100 signifies that family earning the median income has more than enough income to qualify for a mortgage loan on a medium priced home, assuming a 20% down payment. So the higher the index, the more affordable it is to purchase the home. So here's a graph going back to 1990. What do you see? Basically, the blue bar represents today's affordability. So homes are more affordable now than they've been at any point since the housing crash, when distressed properties, foreclosures, and short sales dominated the market. Those properties were sold at large discounts not seen before in the housing market for almost 100 years. So why are homes so affordable today? And it's basically the low mortgage rates, right? I mean, that's the primary factor. We can see it's more affordable to buy a home today than at any time in the last 8 years, mainly because those mortgage rates are so low. So if you're considering purchasing your first home or moving up to one that you've always hoped for, it's important to understand how affordability plays into the overall cost of your home. With that in mind, buying while mortgage rates are as low as they are now may save you quite a bit of money over the life of your home loan. That's powerful, guys, especially from people you're hearing they don't want to get into this dynamic of crazy seller's market and having to pay more than list price for a house. Okay, they might be missing an opportunity of a lifetime because we don't know when interest rates might spike up beyond 3, 4, 5, or 6%. Okay, right now they're under control, but if they keep waiting, you know, we don't know what they might run into. Right now, it's unbelievably affordable. It's a great time to buy. It's a great time to sell, and it's a great time to buy investment property that will cash flow. So if you feel ready to buy, purchasing home this summer may save you a significant amount of money over time based on historical affordability trends. Again, closing for an appointment. That's why I like this. So buying now is still a smart decision. Any thoughts, questions? Anybody here?
Yeah, hey, I'll chime in. I saw Kurt Kennedy, maybe you're on that. I thought I saw you on there. I was listening to something, a talk that Raymond James was putting on where the majority of the mortgages that are, the applications are for borrowers of 750 credit scores or higher, where they're not seeing a whole lot of that lower end, or the majority of what we're seeing or what's happening in the mortgage world is for those more qualified buyers. Are you guys seeing that also?
I'm seeing 740 and above. I'm seeing a lot of that.
So then that really plays into affordability then, because they're now getting the better interest rates. And if that's the majority of our buyer pool that's out there, that I think would lean favorably towards affordability.
I'm also seeing a lot of investors and a lot of second home purchases.
Yeah. The people that can are.
Yeah, we did. I bought one in December and we got 2.5% interest rate on a second home.
There you go.
Like half. Okay. It's cheaper mortgage than my primary home.
Right. Exactly. I mean, you know, why do you think you see so many cranes out there throughout every city you drive through? It's the money is virtually free. So it's just amazing opportunity to grow your wealth and assets. Anybody else? Any other thoughts on this? Okay, let's talk more affordability. Next one's more affordability. Misunderstandings about affordability can cost you. Okay. Some people have concerns about whether or not it's truly affordable to buy a home right now. But when you're addressing this topic, there are various measures of affordability to consider. However, very few of the indexes compare the affordability of owning a home to renting one. And that's what we're going to talk about here. So whether it's more affordable to buy or rent, here are some of the highlights. First, renters pay a higher percentage of their income toward their rental payment than homeowners pay toward their mortgage. That's kind of interesting. when you look at median housing expense ratio of all households, the typical homeowner household spends 16% of its income on housing, while the typical renter household spends 26%. This is true, you might say, because people who own their own home must make more money than people who rent. But if we control for income, it's still more affordable to own a home than to rent on housing on average. And let's look at the chart. So even people that make less than 20,000 pay more for rent than they do to own. And people that make less than 50,000, it's about 10% across the board, right? 34% versus 24%. And all incomes is 26 and 16. So that's number one. Number two, renters don't have extra money to invest in other assets, which we're kind of just talking about. Buying homes is not a decision between investing in real estate versus investing in stocks. Instead, the home buying investment simply converts some portion of an existing expense, renting, into an investment in real estate. Okay? Why do you want to pay someone else's mortgage for it as a renter? You're not building any wealth for yourself.
Hey, Gary, I heard something on James Pivot Shift Facebook page earlier in the week that really struck me as a great point. And it was we focus on the interest rate, mortgage interest rate of what a buyer is going to be paying. Yet when you look at it, what percentage of their payment is going towards their housing? When you're renting, you have 100% of your payment that's going towards that rent, right?
Right.
Versus how much equity are you building each month out of that payment that you're making to, your friendly neighborhood mortgage lender? And when she brought that up, that's a great story to tell.
Yeah.
You can't just be worried about, you can't be worried about one thing or another. You got to look at the big picture and how all these different factors go into why it is a great time, regardless of where home prices are to buy a house.
Well, right. I mean, right now to rent a house is going to cost you substantially more than what it costs to pay a mortgage payment on it. I mean, it's virtually in all price ranges. It's an amazing. That's how low the interest rates are. The interest rates would have to go up significantly for renting to be the same cost as buying, as owning. Okay. And here, another thing, number three, your mortgage remains relatively the same over time. Your rent keeps going up. Once you have a mortgage, it's the same for 30 years unless principal and interest goes up, right? So it's virtually very, very much the same. But your rent changes every year. Okay. That's a pretty powerful difference. And here, look at the chart on the next page. Your mortgage payment stays the same for your 30-year period, but look what's happened over the last 30 years with median asking rent. And this is another great reason to be an investor.
Hey, Gary, speaking of rent, I just met with a homeowner yesterday who lives in Pasco and got a job in Tampa. So he's going to be renting a place over there. And he told me that his rent in Tampa is going to be about $1,600, where his mortgage of where his house is right now was half that. So that's a good example of how your mortgage payment can be a lot lower than your rent.
Right. So he'd rather rent than commute. Is that far over?
Yeah, he's going to sell, rent, and then buy.
Okay.
He's going to buy over in Tampa. He does not want to commute to his job.
Okay. Well, I mean, he should really talk him into buying now because it's going to cost him a lot more later than now. That
I will.
He's paying is going right down the drain.
Understand.
Yeah, you know that. So number
Gary,
four.
Gary, I'm sorry to interrupt. Just over a year ago, it was in March, rates were at 4.5%.
Right.
We're at 3% right now. We're 1.5 points better than where we were before COVID.
That's
so
awesome.
To your point, now's the time to get up and go.
Right. Don't wait, man. Don't wait. It's you know, it's unbelievable. It's just and that's why buyers are out there in droves. The interest rates are driving this thing. And we're finding inventory to sell. You know, I mean, everybody's complaining that there's less listing inventory, and there is less active listing inventory. It doesn't mean less houses are selling. You know, houses are selling in an average of 6 days in the board. Okay, so you're not going to keep inventory on the market, but it doesn't mean less houses are being listed, because more houses are being sold. So go get your unfair share of the inventory of people that want to sell. Help your buyers find houses that no one knows about. And you put them in as a listing and a sale. Okay. Number 4, if you want to own a home and can afford it, waiting could cost you. Here, this is such a great point. I think we need to really underline this and understand it. We need to stop seeing housing as a reward for financial success, and instead see it as a critical tool that can facilitate financial success. Affordable home ownership is not the capstone of economic well-being. It's the cornerstone. It's the first rung on the ladder of financial success for most households. So that's the greatest thing you can do for someone, is to help them get into their first home as soon as possible. If the current headlines reporting a supposed drop-off in home affordability are making you nervous, let's connect to go over real insights into our area. Right, so again, I like these articles. They create sense of urgencies. They talk about the benefits of buying. They talk about the benefits of selling now with a cap NOW. And they use you as a trusted advisor that they need to meet with. And that's a great reason to post these on your social media and send these articles to your database. kcmblog.com. Next, housing wealth. Sorry, Cameron. The missing affordability question, the missing piece of affordability question. Okay. I guess there's been a lot of headlines about properties going up in value and becoming less affordable, because this blog really took it to heart this month to publish all this evidence. Okay. And the main point here is that the average over the last 25 years was 23.6% of the median income it took to handle your housing. Okay. The average over the last 5 years was 20.1%. The average today stands at 20.5%. So right now, housing payments are slightly less affordable than the 5-year average, but only by less than a point. However, they're significantly more affordable than the 25-year average. Put another way, a buyer will likely make a slightly greater financial sacrifice to afford a home right now than if they purchased a home within the last 5 years. On the other hand, it also means that the potential financial sacrifice is not nearly as great as it was over the last 25 years. So yes, now the other thing that blows my mind is the average annual gain in homeowner equity is $33,400 per borrower. That's amazing, isn't it? That means that somebody that didn't buy in the last 2 or 3 years lost $33,400 a year by waiting. And
Gary, I have something to contribute.
Great, Jim. Thanks.
I had a client who bought a house for me 2.5 years ago. He just called me up and said, I want to sell it. I'm tired of my payment. And I said, well, why? Tell me a little bit about that. He said, well, I used to rent and I'd really rather go back to renting. I said, well, let's look at what you've done. I looked at your house value and you bought it at $250. And then today it's worth $350. If you'd have rented for the last 2.5 years, how much would you have saved? Right? Nothing. Now you've got an equity of $100,000 in your house. What's the real reason? And he said, well, the payment. I don't like the payment. Okay, what's your interest rate? It's 4.5%. Well, then why don't you just talk to one of the lenders, have them refinance it? You can probably get rid of your PMI, your mortgage insurance, which is a couple $100 a month, plus reduce your payment on top of that. How does that sound? So he said, I think I'll talk to my lender.
You're great. That's what a consultant does.
So it did. I just let go of a listing, but I'm helping a client.
You created
and
a
it'll come
client.
back.
You created a client for life, and someone that should be raving about you and sending you referrals like mad. Because
so the moral is don't rent, build some equity.
Well, you also brought him through the process of helping him understand that he could still, he built up 100,000 in equity, plus he can still lower his payments.
Yes, he can.
Yeah, substantially by getting a lower interest rate and getting rid of PMI. Right.
Exactly. Yeah. So that's a good lesson, something to carry around and carry around with us, and kind of help other people out with that information. Don't rent, build equity.
That's right. And that's what you just demonstrated, what a great real estate consultant does, Jim. I'm proud of you. Great job. Awesome. Thanks for sharing. Fantastic. So yes. So getting people off the fence can be is a great service to them. You don't want to force people to do anything they don't want to do, but you want to present fact and data and logic and show them what the potential benefits can be. Okay. So home ownership again is the cornerstone. Let's look at net worth based on income level and how much a renter's net worth is versus how much an owner's net worth is. Less than 26,000 in income. An owner's net worth is 103,000. A renter's net worth is 1,000. The difference. And go through each income level, and you can see the significance of home ownership versus renting. Okay. Powerful difference, net worth wise. So, bottom line. Since prices have risen dramatically over the past 18 months, it's slightly less affordable to buy a home today than it was a year ago, but not really. You know, as Kurt pointed out, interest rates are down 1.5 points. So that means you got 15% more buying power this year than you did last year before COVID, right? Because every point it goes up, you lose 10%. Every point it drops, you gain 10%. So it's 1.5 points. You gain 15% more buying power than you had. So how is it less affordable? We had one graph that showed that it's the most affordable that it's been in the last 8 years. However, when you consider the equity gain and the weight and weigh the long-term benefits of building your net worth, you may question if you can afford not to buy now. So why wait? What's the benefit in waiting? Unless you don't qualify. That'd be the only reason not to. And still find a partner to buy it with. Go 50-50 with them and start building your equity. What happens if the person now that waits another 18 months? What if they've been waiting for 3 years? What if that person never bought a house from you, Jim? What if they rent, like you said? They would have never had 100 grand in equity.
Yeah, it would have been 100% cost, 100% expense, nothing in his pocket.
Right. Plus whatever tax benefits they might have gotten from it, you know? Interest is a deductible expense. Unbelievable. All right. Any other thoughts on this? Next page. Thanks, Tamara. Why this is not like 2008 again. Okay, some really good points in this article. We changed. Why is there a drastic difference between 2008 now when the Great Recession was? We changed rules. We told the banks they needed more reserves and that they can no longer underwrite toxic mortgages. You have to do more than fog a mirror to qualify. It turns out that regulation properly done can help us navigate financial minefields. Let's look at this chart. Bank failures by year. Incredible, isn't it? Virtually, less than 10 bank failures a year for the last 7 years. Okay, and powerful. Also, what was different this time? In the next page. What was different this time is, and this is a powerful point. In 2008, the government saw the foreclosure meltdown as a top-down problem and set aside money for banks. Not all of it was used, but the important point is that the government didn't act with equal fervor to help flailing homeowners. Millions of of whom lost their homes to foreclosures and short sales. This was back in 2008. This time around, the government forcefully moved to help ordinary citizens. So instead of helping banks, they decided to help citizens. And what happened since they decided to help citizens? Bank deposits increased by nearly $2 trillion during the past year, and credit card debt fell. Granted, with money that's worth less now than it was before, but still, savings went up, bank deposits went up by nearly $2 trillion because of the rescue plan, because of the PPP, all those things, and credit card debt fell. So bottom line, many have suffered over the past year. However, the economic toll of the current recession was nowhere near the scope of the Great Recession, and it won't result in a housing crisis. We're good. And more people have more equity in their homes than they ever had. Nowhere near where they were before.
Gary, it'll be interesting to see how that shakes out when the forbearance and all that kind of catches up. I think it'll just, if that trend will continue to have that be the bottom up, where they're going to be helping the investors who haven't been able to pay their rent due to the moratorium on evictions and the forbearance that has come through. Yeah. I'm interested to see how that shakes out in the next 18 months to 2 years.
Yeah, we'll watch it, because right now there's virtually no inventory going through the MLS in distressed property. Virtually non-existent.
I would also say that we don't have those no income, no asset loans, the stated income, stated asset loans.
Right.
Remember back in 2007, I was doing 100% financing with a 560 credit score.
Wow. There you go.
Darn. Ooh.
Yep. Tell me about it.
That's asking for trouble, right?
Yep.
Negative amortization loans, where mortgage gets higher instead of getting lower. It gives the buyers an option, mortgagor an option to pay less of a payment, but it adds principal to their loan. I mean, those are deadly.
Well, that's kind of what I'm hearing from the general, I don't know, social media community out there is, wait till this all catches up. There'll be the big foreclosure boom when all these mortgages end up collapsing, and the rental in the forbearance catches up with everyone. And I mean, it's possible, and yet it hasn't necessarily been the trend of what's going on. And I don't yet know what we need to look out for, as that comes, besides just fiscal policy and how they end up helping those, investors. But I still don't think that's going to be enough to swing the supply and demand analysis, even if there were, we'd have to have a lot of properties come on the market from that distress, and they have the equity there. So it's going to be interesting.
I don't see that happening and affecting the housing market. I don't see foreclosure inventory coming into our, making 35-40% of our sales and listings like they were 10 years ago, 12 years or 15 years ago. In Southern and South Florida, on the East Coast, it was, like 75-80% of the inventory was distressed. That's not going to happen again. It's not going to get that way. There's just too many good things going on. Okay. Next. In today's, you already know this, right? Listing prices are like an auction reserve price. You already know this, but this might be something you can send to, your buyer leads to prepare them for what is to come. For every listing, there's 5.1 offers nationally. Half the homes are being sold above list price. Mr. and Mrs. Buyer, you may need to change the way you look at the asking price of a home. It was unthinkable to pay more than what the seller was asking, during normal times, right? The actual sales price would always be somewhat lower than what was listed, okay? But now it's like a reserve price in an auction. And a reserve price is the minimum amount a seller will accept as the winning bid. We talked about it. When properties are selling at 100% or more of list price, that means the list price is the starting point. So today, the asking price is often becoming the floor of the negotiation rather than the ceiling. So bottom line, someone who's more familiar with the housing market of the past than that of today may think it's foolish to offer more for a home than the listing price. Like first-time buyers getting advice from their parents who haven't bought a house in 30 years. However, frequent and competitive bidding wars are creating an auction-like atmosphere in many real estate transactions right now. Let's connect today. So you have a trusted real estate professional. Again, that's who you are, on your side to provide the best advice on how to make a competitive offer on a home that you really want. Does that make sense? Those are the conversations you want to have with buyers. You know, when you're doing your buyer consultation, show them the data, show them what's going on, show them that houses are selling for 100, 101, 105% of list price. Okay, and last, ask them how they feel about that. In competition, if you're in a competition, do you just like to play or do you want to win? Another great question to ask in a buyer consult.
Gary, this is great. And this is something I would recommend all, a lot of our newer agents are working with first-time home buyers, things like that. This is exactly the type of information you want to include in your buyer packet. Send it to them ahead of time when you set them up on an MLS listing, just so they know it's not just you talking. This is what the industry is saying. Yeah. So, and it adds credibility when you tell them and explain to them, we've got to go in with your highest and best offer from the get-go.
Right. Yeah. Yeah. That's why it's so important to, as a trusted advisor, it's your obligation to sit down and consult with them. Not only to, to find out what makes them tick, find out how they think, most importantly, find out what their needs and expectations are, but also to educate them on what's going on in the market, prepare them for what's to come. The best buyer and the best seller in the marketplace are the educated ones, and they will reap a tremendous advantage over someone that's not educated. And our job is to educate them.
Exactly. And you can't overemphasize what you said earlier, and that was, they have their father, cousin, brother, uncle, in their ear who bought a house in 2012, which is a completely different world, if not galaxy.
Exactly. Exactly. Thanks, Mike. Right on the money. Anybody else?
We're seeing our buyers that are coming back in after a few years, we're having to then kind of re-educate them. And I think call that anchoring in the psychology world, where they're using that information from the past and then formulate the decision for the future. And that's our most time spent during the consultation is, enlightening them to today's market.
Well, and yeah, and it's important that you invest that time to help them understand, because otherwise they're going to be, it's tough enough to win right out there right now with all the offers you're competing against. But if you have someone that isn't educated, they may think you're trying to do something to them instead of something for them, right? And you don't want to ever have that thought. That's why we've always advocated doing a buyer consultation. Yeah. Karen?
I'm curious if people are having more success with going in with their buyers, going in with their highest and best, or using an escalation clause.
I think it depends. I think a lot of that depends on the conversation with the listing agent to find out a little bit more about what's going on with offers. We found that pretty successful on our team. Some listing agents aren't even taking escalation addendums or don't understand them. And so I think it really depends. It all depends. And we've got like that list of 12 things to get buyers under contract, and we got to talk about them all up front. So that way, when they fall in love with the house and their emotion sets in, that we're able to have a conversation about what it's going to take to win versus figuring it out once they love it.
Right. And keep in mind,
I would say use the escalation clause. I've used them, and you almost have to educate the other side, because some people don't really understand what it is. It's an immediate increase in the price that you're offering. And I actually saved, instead of going highest and best, we put the escalation at the highest for this client, and we ended up saving about $7,000. Where we would have, if we were really desperate and they wouldn't take an escalation clause, we would have just offered $555. But instead we paid $543. So what's that? 12,000? We saved 12,000. But not everybody will take them. Not all the agents, I don't think, understand what that is. So, and it's a simple form, but if you present it and just tell them exactly how it works, all you have to do is show me that you've got a higher offer, and we will escalate to the next $1,000, whatever that number happens to be, and you win. So that's a lesson.
Right. And yeah, and there are some agents that won't even consider it. I don't know why. I mean, there's no doubt about it. But yeah, but our job is not to make our decisions for our clients. We do have to educate other agents a lot of times. But our decision, what we have to do is present the facts to the sellers, to the buyers, and let them make the decisions, buyers and sellers, and let them understand what they're doing by the offer that you're writing when you're writing an offer for a buyer. If they want to waive an appraisal contingency, if they want to waive a mortgage contingency, they want to waive an inspection contingency, they need to understand what the potential consequences of that is for them. Okay? You don't make decisions for your clients. They make the decisions. You help them understand what they're saying yes to and what they're saying no to potentially by their thinking. Does that make sense? Good stuff. All right, next. Dreaming of a bigger home, why not buy this year? Again, this article basically sells the benefits of selling your home in a extreme seller's market and getting top dollar for it, and then buying a home in the above $1 million price point where there is more inventory and there is more competition. So that's basically what this is talking about. Even though the month's supply is lower in the higher end than it ever has been, above 1 million, okay, there's still competition there compared to everything below 1 million. You know, pretty much. Well, we'll get to it in a little bit. Okay, so there's some good stats and facts in this article that you can read on your own when you get all the information. Okay, the only area where there's sufficient inventory is in the $1 million plus range, and that's true for our marketplace too. Okay, because every other price point, it's less than a 1 month supply or less in most of our Tri-County area. Okay. All right, we're ready for some data. Here we go. REOs in Pinellas. There's only 10 actives. There were 9 in April. 14 sold. They sold at 108% of list price. That 1.08 means they sold at above full asking price, 108%. So the list price was a starting point. Absorption rate went down a little bit from 144.4 down to 140%. That's what happens when you have more properties selling than are on the market active. The month supply of inventory was below 1 month. It was a 0.7 month supply of inventory. And again, all that month supply of inventory means is if there were no new listings put on the market, how long would it take for the market to be empty of listings? It'd be 0.7 months. Okay. For short sales, we have a 0 month supply of inventory because we had 0 solds last month in Pinellas County for short sales, and we only have 1 on the market right now. First time I've seen that. Nothing.
That's the indicator that even if that moratorium on evictions and the forbearance comes to a head at a high level, it's not going to impact. It won't impact the supply and demand analysis. That's it right there.
Yep. And here we go, non-distressed in Pinellas. 1,483 active as of a couple days ago. So this wasn't, I didn't get this data at the beginning of the month. So my active listings might be different than what you see from the board reports. But 1,483 was as of a couple days ago, active on the market. In April, it was 1,389. So inventory went up again a little bit from April to May.
Quick question on that.
Yeah.
This is Jeff with Palm Harbor. How accurate is that information with distressed? Is within using RPR or even any system? Is it pretty updated? Is it reliable with distress? You know, because the reason why I raise that question is you contact some of the individuals that are in distress and they don't even think that they have an issue, or, you know, it's not something that I bring up, but they're not even considering it. So is it something the banks are continuing to work on, or is it just showing distress at this moment with all the forbearances?
Yes,
just a little detail.
This is just MLS activity.
Mm-hmm.
So
okay.
Properties that are in forbearance have not hit MLS. They might hit MLS someday, but they haven't hit MLS yet. So, and this is direct from the MLS under the category either REO properties or short sale properties. So this is exact, these are the exact numbers through the MLS. Now, do foreclosures sell at the outside of the MLS? Yeah. I mean, there's foreclosures being sold at the auction steps, and sometimes they appear on the market later on when banks take them back. But basically, this is the information that I've been collecting for 15 years now. And, you know, back when we were in the middle of everything that's going on, inventory in Tampa used to be over 900 active REOs. Short sales used to be in the 300 to 400 range. And right now they're depleted to the point of virtually nothing compared to the way it was. So yes, this is accurate information according to active listings in the MLS that are REOs or short sales, and active inventory in all 3 counties. So as far as non-distressed property, hope that answers your question.
Yes.
Thanks. So inventory's gone up a little bit, month to month, month over month, but year over year, inventory's dropped by 2,238 listings active. Okay. That doesn't mean that there were less homes listed in May than there was last year. It's not saying that at all. So don't think because there's less active listings, we're in some kind of a depressed market. We are not in a depressed market. The main thing is the listings aren't blasting on the market. So go get your unfair share of them. You hear what I'm saying? So even though there's 60% less listings right now than last year, there were 82% more sales this year than last year. And most of that was driven by COVID causing May to go bye-bye last year, right? We only had 1,249 sales last May because of COVID. Normally there's around 2,000. Okay, so we had 2,277 this year. That's 82.3% more. So 2,238 less listings, 1,028 more sales. The non-distressed properties that sold at 100% of list price. Okay, and if we look further at the absorption rates, last May the absorption rate was 33.6%. There was a 3-month supply of inventory in May of last year. Even in COVID, there was only a 3-month supply. 153.5% absorption rate, or 0.65 month supply of inventory right now. Much less than a month supply of inventory. It's an intensely strong seller's market. Buyers need to be prepared for making decisions quickly and making their best offer on their first shot if they really want something, right? For most properties. All right, any thoughts on that? Questions? Okay, let's look at the next chart. Emma, thank you. Okay, active listings, month over month, inventory, active inventory went up a little bit. Pendings dropped a little bit, but still, there's more than twice the number of pendings as there are actives. So my main reason for saying that to you guys is, do all pending contracts close?
No.
Well, that's my point. You might find pending listings for your buyers that I would search pendings and actives along with withdrawn and expireds for every buyer that I'm working with to find every property that could possibly work for them. And I would call the expireds and withdrawns, and I'd call the pendings too to see if that deal that they have that's pending right now is close to falling apart. Does that make sense?
Gary, I looked at on the MLS the last 7 days, and I did the math. It was 25% of pendings are coming back on the market right now. It was, I think, what, 86 back on market and 306 pendings in the last 7 days. That's 25% are going to come back on the market.
So you got a 25%. You got a 25% shot that you're going to find something that your buyer can buy that no one else knows about.
Yeah, we're running at backup contracts like never before. Like, don't leave. I want to catch them before they go back on the market. So we're going to see pending properties and submitting offers on pending properties with the equal aggressiveness as we are anything else.
Smart strategy. That's just I would expect that from you. Great job. Way to go. Awesome. So yes, that's my point. Don't discount pending properties. Don't discount expireds and withdrawals that were on the market a year or two ago and they didn't sell or however long ago. The way that people don't know how much more their house is worth than it was a couple of years ago. And they may be convinced to sell based on what they could get for their property. Okay. And sales dropped a little bit from month to month. Okay. Which is not alarming at all. Still over 2,000. Next page, Pasco County. Only 2 active REOs on the market right now. Only 2 in all of Pasco County. 12 sold. Those 12 that sold for 104% of list price, above list price. The absorption rate is 600%. I've never seen that number before. A 0.2 month supply of inventory. Amazing. Down from a 0.5. You can't get much lower than that, guys, without it being 0. Short sales in Pasco. 5 actives. There's more activity with short sales in Pasco than there is in Pinellas. 5 actives, 8 sold last month. It took 159 days to get those 8 sold from contract to closing. And still only a 0.6 month supply of inventory for short sales in Pasco County. Non-distressed in Pasco. 771 active listings currently, up from last month. But year over year, inventory is down by over 1,000 listings, a drop of 57.7. Sales, meanwhile, went up from 946 year over year to 1372. So with the 57.7% drop, there was an inventory, there was a 45% increase in sales. So 426 more sales. They sold at an average of full price also. Okay. All that means is when inventory is dropping and sales are increases, it means that the market, the seller's market is getting stronger. And the numbers bear it out. You'll see in May last year, the absorption rate was 51.9. Last month, it was 178%. The month supply last May was 1.9 month supply. In May 2020, it went down to a 0.6 month supply. So virtually, you're in the ballpark on price. You should get it sold pretty quickly. It's like, it's never been more of a guarantee that a listing can turn into a check within 60 days than there is right now. It's amazing, absolutely amazing. Don't get used to it, is all I'm sharing with you. Because the cash flow cycle right now is the fastest it's ever been. When the market shifts a little bit to more of either a weaker seller's market or more of a balanced market, it's going to take longer for a listing to sell. It's going to take longer for you to get paid on a listing. Okay, and you'll need to have more listings in your active inventory to sell. It's not going to be like every listing you take is going to fly off the market forever. It doesn't work that way. Next. So make hay while the sun shines and don't spend all your money. Save money, put money away. I call them freedom chips. Again, active inventory went up in Pasco County month over month by about 100 listings. That's not going to change the world. But pendings went up also. In Pasco, there's almost 3 times more pendings than there are actives. So use those pendings as a resource for your buyers and find out, like Jake's doing. Put backup offers in before the deal falls apart and lock them up if the buyer likes them.
That means that possibly, I mean, if it's 25% is what I saw in Pinellas. I didn't run Pasco numbers, but that might mean 580 houses might come back on the market.
Yep.
If those trends remain.
There you go. Just keep in mind, some buyers' strategy is to get it off the market and then kill them with the, inspection issues, and sellers don't have to deal with that. They can just say bye-bye, get lost. And so that's why houses keep coming back on the market. And you don't want to exclude searching pending listings as if they're active on the market right now. Just because it says pending, you can still search them and find out which meet your buyer's criteria and see if they're still available, or their deal might fall apart soon, or whatever the case may be. So almost 3 times. It's 2.95 times more inventory pending than active. And sales went down a little bit in Pasco too, month over month. No, nothing to be alarmed about. Okay, Hillsborough. Yes, sir.
I'm sorry to interrupt. I was just thinking about all these homes that are coming back on the market, and I think some of these, obviously, I'm not saying this about KW agents, but some of these listing agents aren't asking the lenders about, are these buyers really qualified, and asking those important questions. Have you run credit report? Have you, reviewed their income and assets, and taken a full application? What system did you use?
Right.
And I think that's important, that as a listing agent, that you kind of follow through with that to expedite, so that you don't have to put that house back on the market and wait another 30, 45 days, because obviously time's money.
No question about it. And you're right. And the more experienced agents know these things, and the highly trained agents, which hopefully we're doing here, are asking and seeking these things and taking care of pretty much most of the problems that could come up during the negotiations, rather than after the contract is already pending.
And right? I have those 6 questions or 5 questions that a listing agent should ask the buyer or the buyer's agent or whatever, and the lender. So if anyone wants it, please reach out to me. I'd be happy to get it over to you.
Can you post them in the chat? That'd be great.
I don't know if I could shrink that to a link or not, but I could
send them to Tamara, and we'll get it out to everybody. Thanks, I appreciate that.
Sure.
Yeah, Kurt, you can upload a file, Kurt, in the chat. You just click on chat and then file. It'll upload right there, just as an FYI.
Okay, let me see if I can find it in my desktop. Okay, thank you.
Awesome.
Thanks. Depending on the size of the file, that's right. Otherwise, yeah, send it to me and I can put a link.
Right. So yes, I mean, you can prevent your buyer from having a bad experience and having to compete with lots of houses by, searching pending, expireds, and withdrawals, and finding them a house that, you're not going against any competition. And that's ultimately what our mission is, right?
Gary,
okay.
This is Jim. The other nice thing about being a backup is typically as a backup, you didn't win, so your price is actually lower. But if you get to be that number 1 backup and the first one falls through, then you've got that house for your buyer at a lower price, and they're happy.
Yep, that's possible. It's very possible. Mm-hmm. As long as that seller will accept a lower price as a backup. Right.
And oftentimes, Jim, we're putting maybe not the highest offer, right? We get a lot of cash offers. I think they can sweep the floor. Mm-hmm. We'll put those in the backup, and then take the more, the offer with the more solid, well-written offer that, it less complications and maybe less risk. Cash offers are a lot of risk. And right now we're seeing more cash offers canceled than anything else, or cancel contracts. It's interesting because, and from what I'm seeing on listing side, is that the financing buyer that's cash heavy, willing to make up the gap between appraised value and contract price, is almost a better bet than a cash buyer who, has all that cash because they're coming in with the heavy, like sweeping with the shop broom, trying to get, a whole new house through negotiations. And so that's one of the things that we've been cautious with going under contract to make sure that these cash buyers have a lot of skin in the game and can't just, manipulate the transaction.
That's the key. I mean, it's about getting as much in escrow as possible. with this few.
Right, and removing the ability to get any of that back if they cancel, or some of it back, right? It's, you know, we're seeing offers like, here's $5,000, and if we walk or not, you get to keep it.
That's right. Get the weasel clauses out. And no, I'm talking about significant. I'm talking about 10, 20, 30, 40, 50 grand, depending on how expensive the house is. You know, I mean, because if they're going to pay all cash for it, there's no reason why they can't come up with a significant amount of money, especially if the closing date is an extended closing date. You know, you want a contract wrapped up with contingencies, if there are any at all, within the shortest period of time possible, because you don't want to miss any marketing period. And you want to protect your seller's interest. So yes, I mean, the more you can get, the better. And they shouldn't be alarmed by it if they're a true cash buyer. You know, and that way you'll find out whether their cash is coming from another house that is selling, or whether, you know, where you'll get the story if they want the house bad enough, is what I'm saying. And red flags will come up if you ask for a higher escrow. Okay. Yeah. Okay. Next, Hillsborough. 9 active REOs. Wow. 12 sold. They sold at 104% of list price. Absorption rate is 133%, which means there's less than a 1 month supply. There's a 3/4 of a month supply of REO inventory in Hillsborough County. Short sales in Hillsborough. Three actives, 11 sold. They took 111 days to get from contract to closing for those short sales. The absorption rate was 366.7%, or a 0.3 month supply of inventory for short sales in Hillsborough. Non-distressed in Hillsborough. Inventory went up again. Second month in a row for all 3 counties. Inventory went up a little bit in the non-distressed arena anyway. Sales, I mean, year over year, inventory dropped by 57%, 2,103 fewer listings, but there were 679 more sales. And again, a lot of the number of sales increases COVID related. Okay. 101% of list price for non-distressed properties was the average list sales price ratio in Hillsborough County. The absorption rate went up from 52.8% to 165.7% year over year. And the month supply dropped from 1.9 month supply to a 0.6 month supply. Okay. And then the next page. Again, inventory is up a little bit, 1366 to 1605. Pendings are down a little bit in Hillsborough, but still almost 4,200. That's 2.6 times more pending listings than active listings in Hillsborough as well. So again, let me remind you, search pendings for your buyers also, as well as expires and withdrawals. And sales dropped again a little bit in Hillsborough. Okay. Any thoughts on the data? Jake's going to be doing another class for about 30 minutes on how he uses data and interprets the data. So Jake, I'm not going to go through the MLS data. I'm going to
Hey, Gary.
Yeah.
Sorry to interrupt you. There is a question Julie was asking in the chat. How do you think the end of the moratorium will affect these REO short sale numbers? Not sure what that means.
I can't predict. I don't know how that's going to impact. I think, you know, maybe some investors will put their houses on the market if they weren't able to carry it through. But these are renters that haven't been paying their mortgage payment or paying their rental payments. So they might get some people that own investment properties, might have given them a bad taste in their mouth. So they may decide to put their properties on the market. But I don't know. We'll have to wait and see.
I could try and maybe add to that, Gary. You know, Gary Keller says there's opportunity in every market, right? There's always going to be an opportunity. And there may be some of those opportunities, but, you know, based on how much supply and demand is, even if we did have a huge influx in inventory due to you know, the forbearance stuff, it would have to be like insanely amount of properties to come on the market to slide the supply and demand analysis.
It's not going to be something significant enough to change our market from a seller's to a balanced market. That's not going to happen. I can't see that happening. Yeah, there's opportunities, and I think we should all be calling investors based on our mastermind meeting last month with potential that the 1031 exchange going bye-bye based on Biden's tax plan and with the potential of capital gains going from 23% or up by 20%. You know, I mean, it's a great time for investors to get out of, minimally, it's a great time for investors to get out of investment properties they don't want anymore and trade up to investment properties they might want. Okay, so yes, I think that's a conversation we want to have with investors for sure, but have them talk to their tax advisor, because just because something is proposed doesn't mean it's going to pass. Okay, and it may not pass under the same, exactly the same as it's proposed. They negotiate and sometimes things change. But a 20% hit on capital gains, if it passes that way, is significant. Okay, when you're selling investment real estate property. All right, and the 1031 exchange to go bye-bye is significant. I talked to our tax advisor. He doesn't think the 1031 exchange is going to be gone, but you never know. You never know. Okay, so I'm going to, you know, let you guys go through the pages for, if you want, the pages. All I'll share with you is this. In Pinellas County, above $1 million is a 2.1 month supply when you factor in all the active inventory and all the number of sales. Every other month supply is below 1. 900 to $1 million is 1. 800 to 900 is 0.9, and so on and so forth. All price classes are below a 1 month supply of inventory or below, except for above $1 million. It's a 2.1 month supply. In Pasco County, above $1 million is a 3.1 month supply, because there's a lot less of them. But everything else is below a month supply. In Hillsborough County, everything above $1 million is a 1.9 month supply. And everything below 700,000 is below a 1 month supply. So I was going to share a couple of more pages with you. One with the accountable victim chart. I don't have time to do that. Let's add that next month, okay?
Okay, we'll do that. I know it's a little bit blurry. That's just a,
we'll do
that's
this.
how long you've been teaching this, Gary.
That's forever, man. I've been teaching List Your Way to Success forever. I haven't taught in a long time though. But but this is a great chart, and you can share it with them, but I'll go through it next class. But I do want to share this last article, okay? Just for you guys, just think of this. A setback is a setup for a comeback. So again, we talked about getting back up fast. In John Wooden's first 17 season at UCLA, his teams appeared in the NCAA tournament 5 times and posted a record of 3 wins and 9 losses. He was the winningest NCAA coach as far as national championships in history after that. Bill Gates' first company, Trapadata, a device which could read traffic tapes and process the data, failed miserably. When Gates and his partner Paul Allen tried to sell it, the product wouldn't even work. Stephen King's first novel was rejected 30 times. King gave up and threw his first book in the trash. His wife Tabitha retrieved the manuscript and urged King to finish it. Now King's books have sold more than 350 million copies and have been made into countless major motion pictures. Not one record label was signed Jay-Z. He created his own label, Rockefeller Records. Forbes has estimated his net worth at $1.4 billion. And Time named him as one of the most influential people in the world. Vincent van Gogh sold only 1 painting in his lifetime. Even though he made no money, he still painted over 900 works of art. Steven Spielberg couldn't get into the film school of his choice. He was rejected from USC twice. He's now a trustee of the university. J.K. Rowling was a divorced single mom living on welfare when she had the idea for the Harry Potter books. She walked her baby in its stroller until it fell asleep, then rushed to the newest cafe to get out as many pages as she could before the baby woke up. She is now revered as the creator of a global franchise and one of the richest women in the world. Albert Einstein, Alexander Graham Bell, Leonardo da Vinci, Thomas Edison, Walt Disney, Winston Churchill are all said to have displayed signs of learning disabilities. They did poorly in their school. They were told they were talentless, unteachable, and that they would never amount to anything beyond mediocre. Amazing. Beethoven.
They were off base.
Amazing. Beethoven began to lose his hearing at the height of his career and eventually became completely deaf. He sawed the legs off his piano so he could set it on the floor and feel the vibrations as he played. His Symphony Number 9, of which he never heard a single note, is one of the best known works of classical music. I'm getting goosebumps. It's enough to make you hope for a setback. Get over your pity parties. Get up and get after it. It's in your control. Love you all. Have a great month.
You too, Gary.
Stay tuned for Jake. He's going to help you go through the data and share his brilliance with you.
Thanks, Gary.
Thanks, Gary.
Appreciate your time.
Yep.
Tell Nikki hi.
You're the best.
Thank you, Gary.
All right. Where's my Jake? Where are you at?
Back. I think we lost part of Palm Harbor. I don't know, like internet might have gone down. Everyone in my office has no more internet, so that might have been a problem. I'm on my hotspot on my phone.
Uh-oh. Hopefully we don't lose you.
Did you hear any of that?
Yeah.
Did you hear any of that? Okay,
yeah,
cool.
We can hear you.
All right, good. Well, I'm back. No guarantees, right? Y2K. I don't know, but Palm Harbor Market Center, I think that's probably why we lost so many people, is that no one in my office, like they were trying to reset internet over here. So cool. Well, let's jump into these numbers. I have taken, and I'm going to do an upload into the chat right now from my computer. Hang on here. File. I thought I could upload straight from there. Can I drag and drop into there, Tamara? Is that a thing?
No, I was having trouble with it myself, Jake. It was not giving me all of the options. But you want to share your screen?
Yeah. Well, I'll definitely share my screen. So if you want to make me co-host, awesome, cool. So, and then I'm going to I'll email it to you real quick here, so that way you can put it in.
Yes, I can do that. And if it doesn't let me upload it, I can always put it in the drive and share the link where everybody can get it.
Sure.
With the materials.
And it's all the same information. I just, how I lay it out. I'll pull it up here. Give me 10 seconds. I had intended to just be able to upload it quickly, and that didn't happen. All right. All right, just a second. As soon as that uploads, Tamara, I'll send it to you. I would upload it right to the chat. However, it's not giving me the option to do that. So I'll send it to you, and then maybe you can upload it to the chat. Sure. And then I'm going to share my screen, and I'll show you what I'm looking at. Okay. All right. So what Gary was talking about is the as you can see in his packet, there's all three counties, and Pinellas County, Pasco, and Hillsborough. And so the reason I've done this a couple of times, where I follow up Gary's mastermind with a little bit about how I use these numbers on consultations, how I organize them to take this packet and not just kind of like file it away, but actually use it everywhere I can. So the first thing I'm going to run through, and we're only going to take 30 minutes to do this, because you can kind of go back after the fact and do each county however you want to. This is just how we do it. It's been super impactful for how we're talking to folks. So the first thing I'll talk about is how I organize the material after Gary's mastermind. Like once I get it every month, how I then reorganize it so I can use it. And then we'll just kind of talk about some of the things that I write on here. That way you'll, give you some insight, so that way when you're talking to clients, whether at a listing consultation or a buyer consultation, you can pull this out. Gary Keller says, really our job is to be the real estate economist of choice. And my behavioral style is not to be the analytical behavioral style more than it is to be the relationship builder. And so this gave me the data that I needed to add validity. I see some folks trying to come in, Tamara. Are you not seeing that? Okay. I just want to make sure I'm not taking action on that stuff. Okay, cool. So
yeah, no, I'm handling, and I just put the link in the chat. So I am multitasking.
Okay, so check out the chat. So what I did in the chat is I put in the just Pinellas County. So that's how I organized Pinellas County. I organized Pasco and Hillsborough in 3 separate packets. That way, when I'm on an appointment, wherever I go, I can just be like, whoop, Pasco's out. I'm in Pasco, I'm gonna talk about Pasco. Or if I'm in Pasco and they're moving to Pinellas, I can compare the data to see each one. So, but I'm gonna run through Pinellas County, and then you can just translate that to however you like it. So first of all, I put the 5-year snapshot as my first page. So I had the 5-year sales data and the active inventory as my first page. Second page is the price class categories from wherever I, makes sense. I'm not going to worry about the 40 to 50,000 range because whatever. I'm going to go up from there. And then the next page is, I got my little graph, because some people are graph people. They like to see that how it varies. And then I add in after the fact, those sale type categories: non-distressed, REO, short sale, and then Gary's been including that, the combined data. So that is, each one of those is a packet for me. So I got Pinellas, Pasco, and Hillsborough. So I'll have each one broken down so I can see where each category. Now, rewind, 2 years ago, this section of having the non-distressed, the short sale, and the foreclosure data in there, it meant more back then because there were more foreclosures and short sales. And, even still today, I hear people saying, oh, I want to get a deal, so show me some foreclosures, and we kind of like chuckle a little inside. Like, obviously they need someone to help them figure out what they're doing. But this gives you an opportunity to, when people say that, to say, okay, you want a short sale? Well, guess what? There's one. There's one. All right, that's the one. If that's the one you want, we'll go take a look at it. But there's only one out of however many thousand houses are available. So let's start first on this first page here. And, when we have a buyer or seller consultation, at some point, we're going to want to talk about the numbers. And so this is where I bring this out, and I look at this in a little bit more detail. Now, we're fortunate that this is laid out the way it is. We can see, for those who haven't seen this before, the top half of this is a 5 years of active inventory in Pinellas County. And then the bottom half of this is a 5-year snapshot of the sold inventory in Pinellas County. And so what Gary has done at the bottom of this for us is he's figured out the absorption rate. So those who've been on this call before or know what's absorption rate? What is that? What is that? A quick the CNN version. What's absorption rate? What does that mean?
How fast homes are being taken off the market.
Right. Thanks, Bryant. It's how fast the market's absorbing the inventory. So the market being buyers, how fast are they absorbing that inventory? So the higher the absorption rate, the faster the market. So 129%, I mean, that's lightning speed. I mean, that is the fastest we've ever seen it through this time period. So then if you take the whole market, which is 100, divide that by that 129, you get the month supply of inventory. So let's talk about how we got that absorption rate. So we take the sold data, which we can see here in Pinellas County, 2,211 houses sold. There were 1,710 actives. Divide those that sold into the active inventory gives us the absorption rate, 129%. The total market, which is 100%, divide that by 129, we get 0.78 month supply of inventory. 0.78 month supply of inventory. Whoo, that's fast. That is fast. So what month supply of inventory, so who's been on this call before can explain what a month's supply of inventory means? What is that?
if no new houses came on the market in 3 weeks, you're out of houses.
Yes, right. Thank you again. Correct. So if nothing else comes on the market, it's going to take 0.78 months or 3 weeks to sell all of the houses in all of Pinellas County. And so, which equals a seller's market, you know, and what Gary has taught us is that a seller's market is between 0 month supply of inventory and somewhere between 4.5, 5 month supply of inventory, depending on what number you want to use, is a seller's market. An even or split market is going to be about 5 months to 7 months supply of inventory. And then 7 months or more is a buyer's market, right? So all those people that are like, oh, I can't wait for the bubble, which we know probably isn't going to be happening, to go to a 7 month supply of inventory, to actually even get to a 5 month supply of inventory. You can see that there would have to be some massive changes in our market to even push us to an even or split market. What we know is that, and what Gary Keller talks about, is that a pendulum is always swinging, right? And it just so happens that it's been swinging and just in swinging, and what's happened is that the pendulum length has just gotten longer and longer, and it just keeps swinging up, and it's just continuing to go further towards the seller's market. Will it swing back the other way? Possibly at some point. I mean, it's going to, and yet what would it take to do that? We don't quite know, obviously. We don't have a crystal ball, and yet it would take something drastic to swing it back. Right now, the market we're in, the market of the moment, is an extremely aggressive seller's market, extremely aggressive. You're all seeing that on the marketplace. And so the other thing that I put on this is I do a little bit more math. So if we take, let's look at last year even. So last year in May, 4,533 homes available for sale. Keep in mind, that was the lowest inventory levels ever recorded at the time. If you look back, I mean, that's it. That's the lowest. Like, it started going down and it just has kept going. However, if we take the difference between 4,533 and 1,710, that is 2,823 fewer homes for sale than there were a year ago. And then if we divide that number back into the original 4,533, that's a 62% decrease. So we are basically down 62% in year over year inventory. And then we do the same for the sales volume. So we do the same number. So last year, 1,264. I mean, we were in COVID. We were straight up in the heat of the pandemic last year. I mean, that's what happened in April, May, was people, you know, it was shut down. And so then we've got this huge increase in sales, 947 more, which is a 75% increase. So if you look at between the two, the spread is like 137% is the spread. It's just showing these numbers. When Gary talks about, or when I've heard people talking about having your buyers offer at or above asking price, bringing cash above appraised value, helping them understand that they're in a competition, that is the data that's going to help validate what you show them, don't tell them. Before we move on to the next section, any questions on that? Or what are your thoughts or questions on that? Anybody? Is that the first time you've heard it and this is like eye-opening for you? Or have you heard this before and you feel like, we're like, wow, that's amazing? Emotional outburst?
I have a question. Yeah. So what I think I hear you saying, and Gary as well, is that we're going to continue to be in a seller's market, and the mild effect that a small increase in inventory and also a small increase in interest rate is merely just going to perhaps have the market on the house a little bit longer, instead of 5-6 days to, I don't know, 2 weeks, whatever. Am I correct? Am I correct?
Yeah, I would say yes. One thing I would caution against is the month supply of inventory is not an indication of how long houses stay on the market. So you'll have some houses that'll stay on the market possibly longer than that. Not many in this market. Like, you really have to be priced in left field in order to be on the market longer than about 2 weeks to 30 days. But I would say that based on what I'm hearing and seeing, that you are correct, that it would really take a lot of inventory in order it would, even if we did get another 1,000, 2,000 houses for sale over what we have right now, it would just soften the aggressiveness of the seller's market. It's not going to switch it to another, or to split market or even a buyer's market. So you're correct in that. Does that answer your question?
So sellers will still continue to see crazy pricing?
Yeah, so I've been in real estate since 2013, and we've been in a seller's market pretty much my entire career as a realtor. It's just, what's been happening is it's just been getting more and more aggressive a seller's market. And so, it used to be, average days on market on our MLS used to be 55 days. And it was still a seller's market. Seller's market means that sellers are controlling terms of contracts, that home values are appreciating.
Yeah, so for example, I've seen houses that sold in a particular area in the past couple of years in the high sixes, and they're going for over 900,000 now. Yeah, and they're literally on the market for 2 days, if that.
Yep. That's the aggressiveness of the seller's market, is that the more aggressive the seller's market, the more aggressive the appreciation scale, which is why, yeah.
I'm sorry. I guess that, to be clear, how long do you anticipate this aggressive market lasting?
Well, that's right. We in life, we get a rearview mirror, not a crystal ball. I even heard the CEO of, I think it was Redfin, was on a talk I was listening to, and that's exactly his words. Like, we don't know what's going to happen. I mean, if you'd have told me last year where we were right now, and that was like the highest home values I've ever sold for, was last year this time, well, pre-COVID, I'd have bought 5 houses in my neighborhood if I'd known I could sell them for 600,000 now. I'd have bought them for 300, which would have been the highest they've ever sold for. I mean, I heard Tony DeCello talking about on a Mastermind. He said, what's the top of the market? Well, ask someone in California what the top of the market is. Like, you never know. So yeah, I mean, it's, that's where we can say, okay, obviously nobody knows what's going to happen. Like, we could have, a hurricane come to Tampa Bay and change things drastically, but that would be a micro event in a microclimate, right? I even heard Dave Ramsey talking not long ago about how you're going to have, a factory shut down in Pennsylvania, and that's going to impact their real estate market. But the national real estate market, like, that's not going to change much. Does that answer your question, or at least add some things to think about?
Absolutely. Thank you very much.
Cool. Okay. There's some hand raised. Go for it. Whoever's quicker to put your hand down, go first.
All right, Angie, I'm going first.
Melissa, go ahead.
So I'm looking at these numbers, Jake, and I'm looking at it, right? And I think that our sales are pretty much in line with what they are historically right now. Right? You would agree with that, correct?
Yep.
Forgetting last year, because last year.
Yeah, if you think about, if we get COVID out of there, I would say that trend of what we see, that what's happening is pretty normal.
Right. However, our listing inventory is what's really impacting our market, our lack thereof, because we are so far down of anything that we've ever experienced. And that's why we are where we are, right? It's not that we're selling any more houses than what we normally do. It's just we got nothing to sell.
Yeah. That was what Gene Rivers was talking about on his talk. I always drop these names because those people know more than I do, and I listen to them. We don't have an inventory shortage problem. We have a mindset problem. I mean, these houses are still selling.
Right. It's just, we just don't have anything to sell.
It's just that we need to be, yeah, I mean, and it's not a matter of, there's still a lot. I mean, we still have the highest record sales. Mm-hmm. And so even though there's 1,710, that just means that they're selling for more than they ever have. But, one of the things that Gene Rivers was saying was stop telling it's not an inventory shortage. because we have the highest sales ever. It's just a supply and demand analysis. Those houses are still out there. It's just buyers get fewer to choose from. Right. And I mean, in all reality, you get less to choose from. It's easier to make a decision. If you're going to show fewer houses and put more of them under contract. So it's interesting.
Yeah. And then one more thing,
right on.
Throw this out there, Angie, I'm sorry. And then I don't know where to find this information. I asked this last month on Gary's Mastermind, is that the conversation that's come up is like, you know, when houses were at their peak in 2004, 5, you know, whenever, right, before the market shifted, are our prices at the same price point now that they were then, or how much higher or whatever are they, right? Because everyone's like, oh my God, houses are getting too expensive, but are they really too expensive? Has it just taken that long to get here? And I don't know. So I'm just throwing it out for those people that are like numbers people that.
Yeah, you know, that's a great question. And I don't know if anybody, I think the Board of Realtors probably knows that data more than anyone. One thing I did do is I emailed Pro, and I've got the last 10 years, or no, I think I've got back to 2005 of this graph.
Well, there you go. That's what we need. So we need.
Right. Well,
prices.
It doesn't show pricing. It doesn't show pricing.
Okay. All right. Well, I'll do that. I'll email the board.
Yeah. And I mean, they're just like, here you go. Like it's all in their archive. I have it on my computer. I'll email it to Tamara and she can have a follow-up, but it'll show like, so basically it would be like 2008, 7, 6, 5, right?
Mm-hmm.
That would probably, I mean, if you wanted to just, you know, for whoever wants to geek out on these graphs and numbers for, I don't know who.
Well, I just think if you're talking about educating your clients, right? Are they like, oh my God, prices are too high or whatever, right? Just from an education standpoint, it's like, where's the historical data that gets wrapped up in that? Just like all this number.
I'll bet you Gary's going to have that graph like that at Mega Camp when they do some kind of a state of the company or state of the union. So I'd be keeping an eye on that. August. I'm sure we're going to get that data from Gary in August.
Yes,
for sure.
Agree. All right. Thank you. You're awesome.
Cool. Yeah.
There's another
Angie, go ahead.
There's another good resource if you want to write down his name. It's Elliot Eisenberg. He's an economist for the Florida Realtors. He might be actually for NAR also, but he's really funny. If you ever get a chance to actually see him in person, he's hilarious, but he just kind of breaks it down in a really simple format. He calls it Laughs and Graphs is his, I think, website name. And he does a lot of just simple stuff, you know, little snips. I get email, you know, alerts from him on things. Have you seen that, Jake? Have you seen him?
I haven't. His name is Elliot
Eisenberg. E-I-S.
Eisenberg.
Yeah. Anyway, he's pretty cool. And I think, you know, if just to answer just the best I can, or at least the answer that I feel the most comfortable with, when people come at me with the, when do you think, you know, the shift is going to happen, or when do you think the price, you know, I think I'm going to wait till the prices go down, or what do you think it's going to take to move the market around? In other words, that crystal ball question. Because I got my license in 06 and started practicing in 07 and rode the whole market down. What I really saw through everything was that supply and demand are what control our market more than any other factors. And the issue really is that we don't have enough supply. Now you're right, we can still have sales and we're going to go out and find those sales. The aggressive agents will always have business. We will always sell. But literally they stopped developing land between 2008 and 2013, 14. And we do have a supply gap. It's
like 4 million houses, right? Something like that.
Yeah, so it's going to take, and Gary talked about that too on Family Reunion, I believe, or anyway, it's been talked about in a bunch of different places. But I really believe that really is the golden key. If you want to look for any kind of trend, it's going to be, when do they actually catch up the supply to match the demand? And
I agree. And you know, when we talked about affordability earlier, I think in that time frame we were at like a 7% interest rate.
Yeah.
And so it's like the affordability factor was just in the tank for sure.
Absolutely. So hopefully that's kind of my indicator, is what I look at is how fast are they catching up? How many more homes are being built? You know, where is that?
Yeah. I listened to a great talk, Raymond James. We have some investments with them, and they did a whole talk on just the state of inflation, and is it transitory, and just other factors. And that was, there's so much pent up demand right now in the first time home buyer market, like more than it's ever been before. That pent up demand it's just got to get unleashed on something, and there's nothing to unleash it on. And so even like there'd have to be, and again, it's just so much inventory would have to come on the market. And as we're seeing with buyers losing time and time again and still having record sales, that like they would just eat it up. They would just eat it all up, and it wouldn't even, I don't think it would move the dial much at all.
I agree. Yep. It's going to take a lot more supply.
Yeah, a heck of a lot more, a whole lot more, and we don't have it. All right, so then just in the sake of time, I know we got 5 more minutes, and I appreciate your investment of time, how I break down the next page. This is really where, you know, I started becoming confident in my understanding of markets, is when I took that absorption rate ratio and the supply and demand analysis, and I put it to each price class category, and I would just do this every single month. So I would print it out, and then I would get my printout, and I would go down. And so I wanted to share with you, like, I got this, I downloaded it. It literally took me 10 minutes. I got really good at the math, and now I'm familiar with my market. And before, when it wasn't like, as you can see, we're talking week supply of inventory versus month supply of inventory in most price class categories. But you can see how doing this now, when you get a buyer who's shopping, and they're shopping, you know, 600 to 700, and they're saying, oh, you know, we're a little bit higher price, so we'll maybe have a little bit easier go out of it. You're like, sorry, not the case. We're still at 133% absorption rate, which is a 3-week supply of inventory. It's just not going to be the case. So, you know, it's that is where I'm having a bit of a reality check with our clients about that. The other thing that I could point out on this sheet, which I didn't write down here, which I did on my page, is this area. I taught this class about 3 years ago, and I was looking back at some of my notes. The meat of the market in Pinellas County, and you can see over here the active inventory. We've got 8%, 9%, 14%, and then 9%. So this 200 to 500, it used to be 200 to 400 was the meat of the market in Pinellas County. That shifted. If you'll notice, the 400 to 500, it used to only be about 5% of our market to 7% was in that 4%. It's actually taken over the 200 to 250 range. Now it's really 250 to 500 is the meat of our market. The prices have gone up, and that is also what shows the meat of our sales. So you can see that 200 to 500 range is where most of the sales are happening. And so, I mean, that's where we're seeing, as you know, as we're looking at neighborhoods, that's the most of the sales, and that's going to be the most competition for buyers. It's actually way more competition. And if I just do that math real quick, what's that? 12.1 plus 12.7 plus 18.2 plus 10.1 is 53% of all the sales happen in that price range from 200 to 500. And just from me looking at this every month over year, it used to be, we would say 200 to 400 was the meat of our market. That was where the majority of the homes were for sale and where the majority of the homes sold. Now we're up $100,000 in the meat of our market, more than we ever were before. So what are your thoughts or ahas when looking at this information? Was this helpful for y'all? Yeah.
It's amazing. You do an incredible job with this. I love the way you think, Jake. And I can see, I mean, it's such a useful tool. And I really appreciate the ahas.
Yeah, no, that's, I mean, and
you'll learn. Moving in a lot higher, you know, we're attracting a more, higher end buyer to our area.
Yeah, I mean, and Judy, you know the luxury market as good as anyone here. I mean, luxury used to be 500 and up, and it's not anymore.
No, that's a standard house now. Yeah.
Yeah, that's the meat of our market.
The affordability makes sense. People can afford to pay more.
Yeah. I mean, I just bought a house in North Carolina for $320,000 and my interest rate was 2.5%. Yeah. I mean, it's like, okay, well, sure, let's do it. What other ahas or thoughts do you have in looking at this information and how it's broken down, or how you could possibly use this tool to better educate your clients? Well, then I'll leave you with this. Tony DeStello was on a call not long ago. This is actually just at kind of probably at the end of last year. And he said, Tony, if you don't know who Tony DeStello, he's one of the master coaches in our company. He said that a buyer is, how did he put it? He said that every buyer is either, what the heck did he say now? Who else heard that was on that call? They're either qualifying or they're disqualifying for the opportunity to work for you, to work with you, right? Every buyer is either qualifying or they're disqualifying for the opportunity to work with you. If a buyer isn't going to meet you for a consultation, not a buyer. If the buyer isn't going to listen and understand that this market that they're in, and they're going to see these numbers and they're going to be like, oh, dang, I had no idea. Like, I am ready to start swinging. I'm ready for the rope-a-dope, not a buyer. If they're not willing to offer above asking or at or above, not a buyer. If they're not willing to make up the difference between appraised value and contract price, not a buyer. And so, like, we've got to be, this is what's giving you the validity to tell your buyer, this is what you're going to have to do. You're going to have to be at or above, bring the difference, and, you know, name your firstborn after the seller in order to win.
Serious?
I read that. Someone did that. I read it. Someone did it. So what, any other thoughts? I know it's 3:01. I appreciate everybody jumping on. And this is one of my favorite classes is Gary's Mastermind. So I'm going to be really interested to keep tracking this. I mean, I'm like chomping at the bit to get this data. The only thing I'd ask is if we could get it sooner, but we're beholden to the board to get us there. Any other questions or thoughts or comments before we go?
Thanks, Jake.
I have a question.
Yeah, go ahead.
Yeah, so it's actually in reference to something you said when Gary was on. You mentioned a list of 12 things to get buyers under contract. Is that something that's specifically yours, or I'm a newer agent, so looking for tools, of course.
Sure. Is
that something that's available somewhere that I could download?
No, I don't, not really. It's, you know, I would say the morning calls that we do in the market center, it's how we can kind of develop that. I mean, you could really go through and just think about all of those ways. I don't have that necessarily down somewhere.
Okay.
We're talking about building like a, I've got it. It's just like, it's built into my listing or my buyer consultation.
Oh, gotcha. Okay.
What we're talking about right now is at or above asking price, escalation addendums. We're talking about bringing cash above appraised value, removing appraisal contingencies, super tight timelines on inspections, ordering appraisals instantly, building rapport with the listing agent at a high level. The lender your buyer chooses means a lot, right? If they're using someone like Van Dyke versus using, you know, Bank of America, no judgment, but you know, the lender makes a difference. If the lender is going to pick up the phone and call the listing agent and battle for your buyer, that's a big deal. Right. We're also seeing some non-refundable deposits and more escrows, higher escrows. You get two offers. One's a $3,000 earnest money deposit. One's a $10,000 earnest money deposit. How does the seller, you know, how's that going to be perceived by the seller?
Mm-hmm.
Getting our buyers in backup contract positions has been a big way to win right now. You know, and it's just the kind of the list goes on, and you'll want to have those when you're sitting down with a buyer, be like, here's the buffet of things you're going to have to think about when winning. And ultimately, I want to talk about these things now before you fall in love with the house. Because once you fall in love with the house, you know, they're like all riled up with their hair on fire and they can't rationalize through what it's going to take.
Right. Yeah, this is great. Thank you. That was a nice quick list.
Yeah.
I appreciate you
I mean,
sharing.
I'm like, where's my list? I don't know. I say them so often. It's like, and the same thing with as a listing agent. Like if I'm at a listing appointment, I'm like, those are the things as a listing agent when I'm getting, 10 offers, like these is what I'm telling buyer agents, like, here's what you're going to have to do. These 12 things, like whoever does these 12 things is going to win.
Mm-hmm. Perfect. Thank you so much.
Other questions? Anyone else? I know we're a little over. I'll hang on. I got a minute.
Jake, do you use like buyer offering to pay for like title insurance and doc stamps and?
Yeah, absolutely. Yep. So we're having buyer choose title company and pay owner's title policy. Connect with Star Title on that. They got a good program for that right now that's making it a little bit more affordable for your buyers. So, I mean, we're just having the buyer and we're letting the listing agent know, look, buyer's in our market is one of the few in the state where the buyer doesn't typically pay those fees. And yet, we're telling the listing agent, hey, look, buyer will choose title company and pay owner's title policy. Like, absolutely, Brian. Yep, there's another one.
Kind of like how Howard, I'm smart folks, let's just say, they talk about there's 27 or 20 some odd points of negotiation, and using back, figuring out the ones that you can tweak to make your buyer's offer a little bit stronger.
Yep. I had buyer agents offering part of their commission to the seller and or to me to win as a listing agent. That was interesting.
I heard of somebody where their buyer offered to pay the realtor fees.
Yep. I mean, like, okay, so the list just keeps going on. Like, what's it going to take in this market? What's it going to take?
Right.
Cool. Other questions? I think we were right about on time, a little bit over. So let's leave it at that. I appreciate everybody being on. Thank you, Tamara, for hanging in there.
Thanks, Jake.
And
Pleasure. Thank
Thanks,
you so
Jake.
much, Jake. Thanks,
everybody. Have a great afternoon.
Thank you.
Thank you, everybody. Bye.
Yeah.